So just walk us through your thesis for this stage of consolidation.
Thank you, Nejra. I think it's a very exciting time for the oil sector. The way we see the cycle evolving is we think we've been through 10-15 years of what we call the investment cycle, where we get new entrants, the oil price is higher, we get very easy funding for all projects, and that looked like a great time for the oil sector, but it was a horrendous time for big oils, as effectively everybody ate their lunch. Today, we're entering a different phase. I think we know where the new resources of oil are going to come from. You know, the 190 billion barrels discovered in shale has sorted out the problem of shortage of resources, and the industry can go and really focus on developing them efficiently through a good layout of infrastructure.
Yeah. And what does this consolidation look like with the big oils? I mean, are they gobbling up smaller players that allow them to diversify, or do they become more concentrated in what they're doing?
Absolutely. The interesting thing is the consolidation is happening even without M&A, in that what happened is effectively a lot of these competitors that came in the last decade are finding it so difficult to fund themselves, particularly through the reserve-based bank lending that funded a lot of the long-cycle projects in the past 10 years, that suddenly they go back dominating the market for big new developments. Just to give you an example, in the last 10 years, when we look at mega projects, we had over 50 companies sanctioning them, so going ahead with the investment decision. In the last 3 years, the 7 big oils, what we call the new 7 sisters, dominating these developments, they took 90% of the FIDs. So we're back to a concentrated market like we had in the 90s.